Stronger than expected data from the US might give the Fed grounds to rein in QE, but will this seemingly good news give impetus to currencies this time around, or will September's market tumble be repeated? Joining me for the first edition of Targets in Focus is Anders Eklof. Anders, sterling has found it more difficult to make headway over the past week, despite generally favourable data, which suggests that much of the potential good news has been priced in. In this context, reaction to this week's industrial data will be watched closely to assess whether there is scope for further gains. But are you bullish or bearish on the pound against the US dollar?
We tend to see that the sterling will go pretty much sideways against the dollar. We are a little bit surprised about that euro dollar is up here, and I think that market is that on average, and that is the main reason I think that the sterling is a little bit surprised negatively, in particular against the euro. We still see quite big difference between the Bank of England and the ECB going forward, and we think that the ECB will have to fight with very low inflation expectations, while Bank of England is going to be a little bit more less dovish than the ECB. So we see sterling cabled sideways, but we see euro sterling gradually lower.
Significantly, there was no selling pressure on the Swiss currency, despite an improvement in global risk appetite. Do you think the National Bank will tolerate a firmer franc over the medium term, especially with deflationary pressures easing? What is your long-term outlook for the Euro-Swiss franc?
Our take on that is we think that they will keep the floor, and that is they are not going to give up on that 120 euro Swiss floor. Then again, at the moment, I think there's a little bit disappointment in long dollar Swiss positions that has been taken out, and that's a little bit the same story as we had in euro dollar. So but I think that the Swiss bank will stand firm on this the floor in euro Swiss. Even if Swiss data has perhaps been a little bit better than expected.
The dollar consolidated above the 102 level ahead of the US payroll data on Friday, with solid US support at lower levels. This morning, Japanese economy looked suddenly weaker after GDP was revised. Some analysts do now believe the Fed would be fully justified in announcing an end to their bond buying scheme, but how do you foresee the US dollar against the yen performing as these events unfold?
Our belief is that dollar-yen has further upside. Positioning is quite extended at the moment, but we still think the underlying drivers support this, and that's the gradual divergence in the long-term interest rates. And we can see Bank of Japan doing further QE during the first half of next year. So we think that trade is still intact, and we see like 105 in 3 to 6 months.
Anders, thank you so much for your time today. Well, viewers, that's all from Anders and myself for the moment, but for more exclusive interviews, keep clicking back to Dukascopy TV.